Welcome everyone. Walgreens Boots Alliance is the subject. Stick around to the end of the video and you'll find out my thoughts on the company and where it sits in my portfolio and the overall performance for me so far. So Walgreens is a really interesting stock at the moment. In the last couple of weeks they've released updated results and yeah, it looks quite promising actually. So let's dive into some of that detail to see how it's all going. So we can have a look at some of the high level information first of all. We're talking about a $40 billion market cap company, trading at around about $47 a share, trading PE 21 but 4 PE of 10. So that is suggesting that they're expecting growth in earnings going forward. We're looking here, the forward dividend yield is 4%, as is the trailing yield. So at the start of this, I'm looking at this thinking, right, a company looks like it's going to be growing earnings, getting a 4% yield. That looks pretty interesting. Have a look at the financial analysis. It's covered by double figures number of analysts, so a decent number. Not much happening there on the sales growth is the estimate. And EPS, 493 to 518 next year. So a slight growth there. You can see there EPS of 518 and that price of 47. That's why the full PE is just under 10. Now, the actual expectations, at least from the Yahoo analyst set, is 2% growth per year for the next 5 years. That's quite disappointing. So the view of simply Wall Street is actually slightly different. So they have 14 analysts, and that's actually suggesting 23% annual earnings growth, which is significantly different, and that would be pretty exciting. Earnings per share at 2.3 going up to 545. Both sites are suggesting forward P of less than 10 based on different sets of analysts looks quite reasonable. And a forward P of 10 is cheap actually for a company these days, particularly if their dividend is 4%. And the debt to equity you see here has been improving, and absolutely key here if you are interested in stock. Now this isn't a buy recommendation to be clear, but if you are interested from your own research, first of all, the ex-dividend date is November the 12th, so that is coming up in 12 days' time. You want to get in on the action on the dividend, and if you'd like to do that, set up an account. I've got a couple of referral links in the description below, where if you're UK based you can sign up through free trade and maybe get a free share, or interactive brokers if you're international. So if Walgreens interests you, you can get some benefits from signing up with those brokers. And the dividend has been growing very nicely over time, so it's got a very good dividend record with that yield of 4%. That's impressive. And the future payout is a payout ratio is expected to be just 38%, whereas it's 82% at the moment. So it suggests a sustainable dividend going forward. So it's really looking promising at the moment. Now, of particular interest is Ros Brewer here. Now, she's relatively new into the role, but she's got really good credentials from previous roles, including work at Amazon and Starbucks, I believe. I'm looking at her kind of outputs on the recent earnings call. She does seem very impressive. Okay. So what's been happening in the market recently? At the start of the pandemic, if we go here, we got to sort of low 40s and then went further down to $34 a share about a year ago, which looks like a fantastic price. Now at 47, although it had recovered to 55 at one point. $47 per share seems quite cheap on the face of what we've seen so far. But let's just have a look at the recent earnings. I won't go through the full detail. You can see here there's a huge amount of information, but what I'm going to do is just pick out a couple of the key bits to highlight for you that demonstrate where I think the company's going. So first of all, we know this is a very strong presence in the US, really big physical network, loads of pharmacists. So they have got an advantage in that space if they can leverage that physical space, and they've been doing quite a lot of COVID vaccines in the US through their network. They've been getting boots on the ground into the doors, into their stores. That's been a good advantage for them. And they are now talking about a broader healthcare ecosystem. So looking to build that ecosystem, all different bits and pieces, so that you're not just going in there to see the pharmacist, deal with your prescription and go. Whilst you're in, you can deal with other things, and the company's got other opportunities to earn from use. Chronic patients make up 60% of the adult US population. That seems really high to me. It's a surprisingly high number. But they incur 90% of the cost. So these are customers that are attractive, if you will, to Walgreens. They care for 35 million chronic patients, give 84% of their revenue. So if they can help these individuals, they can help them with their chronic conditions, there's the opportunity to earn significant revenue. But also, you're looking at revenue, but the other side of the coin, increased earnings, is cost, and they have got a transformational cost program. Now, they have been doing really well on these costs, and what they've done is look at fulfillment centers. And if you look at what the benefit here is, there's a $1.1 billion working capital reduction in 4 years' time. So they're really improving that logistical side of things. We're building trust with customers, and they've done 60 million COVID-19 tests to date. And they've now got a My Walgreens program. They've got 85 million members already, around about what looks like a year's time. So that's incredible. It's delivering $1 billion of revenue and increase their effectiveness. And they can connect directly customers. Look at this, 53 million emails. So this program looks like it's been working really well. They're getting more data points on their customers. And it will enable more personalized offers. And they go on to talk about mass personalization, which is kind of a paradox, really, but I guess it makes sense. They've got an advertising group, and they've also got a credit card. They're going to have 1 million active cards. So again, that's another different way that they're leveraging their customers. E-commerce revenue grew by over 100% in Q4 at fiscal 2021. So that's an incredible rate of growth. So they're clearly now focused on improving their cost position, but also improving their revenue streams, but also the service to the customers as well. So it sounds like a really good package. And the key KPIs, these are things they really value. It's the cost savings, 1 billion, own brand penetration, and alternative profit income. Now, for those of you in the UK, Walgreens you'll know as the Boots name, which is very well known in the UK. And again, lots of COVID tests and vaccinations being done over here in the UK. And look at this, more than 40% of beauty products UK are purchased at Boots. So it really is a go-to destination for certain kinds of products. And they've been increasing their brand within that offering. They're enhancing the in-store experience, which is actually great because I've been in lots of different Boots stores. And it's very warehousey, the ones I've been in. It's not a very exciting place to be. So if they're enhancing that experience, that's really good news. And look at this now. So the Chief Financial Officer is saying cumulative cost savings of 2 billion from their programs. They're not just talking. A lot of management teams say, yeah, we're going to cut costs. And that's a great aim, but can they actually do it? And they've already saved 2 billion, which is absolutely fantastic. And they're 1 year ahead of target. So they're doing really, really good on this. And they're going to expand that program. So there'll be a lot of savings coming through. There's an expanded partnership with Village MD. So they're going to have co-located clinics and over 1,000 units by 2027. So they're looking at that area as well. And of course, as the news that came earlier this year, they have sold their Alliance healthcare business for 6.5 billion. Obviously, use some of that money to acquire a stake in CareCentrix and a majority stake in Village MD. So it looks like they're taking decisive action. They've got a plan. They're doing really well. Cool. So that's where we are. So if we have a look at Simply Wall Street, they think they're 65% undervalued. So they think 135 is fair value for this. Current market price is 47. We've got a forward PE of under 10. You think 15 is probably a reasonable one. So there's probably some growth there, particularly with this 4% dividend and improving balance sheet and improving prospects. And just have a look at how it's set up in my portfolio. I've made purchases at $49 and $48 a share in February and July this year. And the current position is just over £1,000 in holdings. That's about 2.5% of the portfolio. It's not a huge position, but it's not the smallest either in terms of the portfolio. And I think there's probably quite a good argument here for me to increase that position. So I think it is a company that's undervalued, and the dividend is attractive and sustainable, and likely to become increasingly so. They've improved their balance sheet, they're cutting costs, they're improving their revenue situation. They've got a really good management team in. So I'm struggling to think here what's not to like about this company. But I think there was a dip in the market price, and we've seen here it has, if we go back to Yahoo, it has been on a little dip recently. If this went down to sort of $40, I would certainly be absolutely piling in at that point. That seemed really, really cheap to me. If we also have a look at their history, look, they do beat earnings every single time by the looks of it, by decent amounts as well. So there are those projections. There's a pretty good chance they're going to beat them. Analysts are generally saying hold. Yeah, I don't think hold is wrong, but I think if that price nudges down slightly more, I think it's probably moving into a buy. So Walgreens, Boots, Alliance, they're my thoughts. And if you want to see how it fits into my portfolio, click on screen now, and you'll see my full stock by stock US portfolio breakdown.